Traders Corner is proudly brought to you by IG, the specialists in CFD trading.
Welcome back and welcome to Traders Corner. Joining me as always in the studio is Garth McKenzie, founder and editor of Traders Corner. Garth, welcome.
Hi, JSE.
Garth, I know you don't mind admitting when you've called it wrong, and I think that's where you want to start off this week, is looking at the performance of the top 40 over the past few days. It has been quite ugly for the markets. And actually last week you took a long position in the market, but that doesn't really seem to be working out at the moment.
Yeah, that's right. It's not working out so well for us. But remember, we took a long position against our options structure, so we kind of hedged out. So it's not all bad news, and we'll get back to that later. We're actually making money on our options structure, but it's offset to a certain extent by losses on our top 40 long now. But if we actually have a look at the top 40 chart, this is where I think I've got it wrong. Or not, I think I have got it wrong in the last week particularly. Now that graph that's on the screen at the moment is a graph of the JSE top 40 index. And if you have a look, there's this well-defined upward trend that has been in place for the last year or so. And you can see how it joined all the lows during the past year. Now recently I said that this sideways action that we saw in our market was most likely going to resolve to the upside, and that we had a nice sideways correction in time as opposed to a correction in price. But 1 week has made a very significant difference on this chart, and you can see that we've actually broken down below that uptrend quite significantly in the last week. And we're now starting to make the first significant lower low on the top 40 that we've made in a year. So it is quite meaningful. Also take note that that lateral line that I drew in there was at 45,200 is where there's some lateral support as well. We've taken out that to the downside as well. So it's interesting, this definitely does change the game slightly from a technical perspective, that we have broken down, we've broken this uptrend, we've broken below some lateral support. We are very, very oversold at the moment, however, and so the prospect of a bounce back up from here is reasonable, I think. But the question is now, are we going to bounce and then face a whole bunch of resistance when we bounce back up at 45,200, or perhaps we can bounce as high as 46,000? But then do we fail at that level and turn lower again? It remains to be seen. But I think this breakdown that we've seen in the last week actually is quite significant. It does change the game a bit in terms of our market now.
And if you look at the moving averages, so the 50-day moving average or the 200-day moving average, I don't know if you've got those lines on screen, but where are we in relation to those?
Yeah, I don't have them on the screen, unfortunately, but the top 40's 50-day moving average is now starting to point down for the first time in a very long time, which I always use as a good indication of medium-term momentum. And the fact that that thing is now pointing down is slightly concerning for the medium-term momentum. The 200-day moving average that you asked about comes in at around about 43,500 or somewhere there, just above that level actually, on our top 40 index, and we're not far away from testing that level now.
So Garth, ultimately you may look for a bounce, but longer term than that you'd be quite wary. Yeah,
that's basically my theme. I think we suspect that we will probably get an oversold bounce in the near term, but because we've got some technical damage on this chart, the question now is that going to be a bounce that will now be faced with stiff resistance going forward? So yes, a bounce in the short term, but I certainly would be wary of getting long too aggressively for too long. We might even see an opportunity to potentially line up a few shorts if we do get a nice bounce from here.
Having said that though, this is the top 40, so it takes into account all the various indices, so the financial, the resources, the industrials. So within those different sectors, how are they performing against each other and also against the all share as a whole?
Yeah, so that's right. We've had very much a tale of two markets on the JSE for a long time. We've had resources underperforming and the domestic stocks, being the financials and industrials, outperforming. And that still is very much the case as things stand at the moment. And to illustrate this, I'm going to look at a chart of the Findi 30 and then a chart of the Resi 10 index. So up on the screen now is the Findi 30. This effectively represents, I like to think of it as the best representation of South Africa incorporated. We've got all the big heavyweight domestic stocks in here. In other words, no resource shares are in this. So it's things like Bidvest, Barlow World, Naspers, Richmond, SAB Miller, MTN, the banking shares, the life insurance shares, all that, the big 30 heavyweight stocks in domestic sectors. Now what's interesting, if you look at this Findi 30 graph, is notice that uptrend which I've drawn in there goes back to June of last year, and we're actually testing that uptrend now, which is at 62,000. on the Findi 30 index. And that also corresponds with an area of lateral support now. So it's going to be interesting to see how we fare at this level. Certainly in the past day or two, we have noticed our market reversing up off that support level, which does indicate for now anyway that that support is being respected. So if that's the case, there's a fair chance that we get a little bit of an oversold rally from here.
And it does look very oversold if you look at the stochastics.
It's very oversold. If you take a look at that stochastic, you can see it's sitting right down at the bottom there. So that is very, very oversold. And that does kind of lend itself to the prospect of a little bit of a bounce, potentially.
What about the resources index?
Well, the resource index is not looking as healthy, and this has been a bit of a disappointment, certainly over the last 2 months or so. And interesting that this weakness in the last 2 months corresponds with a time where we've seen massive dollar strength. And the dollar strength is translated into weaker commodity prices. So it's understandable why we've seen the resources index underperforming like this. We've broken below that uptrend, which goes back over the last year. And also there was some support there at 54,000, lateral support. And we seem to be trading below that level now as well. So that, all in all, to me, is not a fantastic looking chart, albeit that it is very, very oversold. And at some stage, we will probably get a bit of an oversold bounce from here. Certainly from a high probability trading perspective, I still think your better odds are going to be found in the Findi sector.
Which is interesting because some would automatically look to the resources sector to find, you know, the bigger bouncing beauties, but it is not the place to be in your view.
No, look, we always like to try and align our trades with where the momentum is the strongest in the market. And at the moment, this chart, these two charts and the next two that I'll show you, are illustrating that your highest probability of success is now to get on board the momentum within the domestic sectors, in other words, in the Findi sector.
Well, you are going to be looking at one share in particular this week, and you have actually, you've entered a trade, haven't you, Garth?
Yeah, but let's quickly first have a look at the relative sector performances of the indices here. So what I've got on this chart now is the Findi 30 index relative to the all share index. In other words, what we do to get this chart is we take all the historical values of the Findi 30 index and we divide it by the corresponding historical values of the all share index, and we plot that on a graph. And really and truly, when you see a rising trend like that, it implies that the Findi is outperforming the all share index, which it has been for a very long time. But from a technical standpoint now, we've got the sideways channel that's been in place for the last year, and we've actually now seen the Findi, the relative chart of the Findi, starting to break out to the top of this channel, which is quite a bullish sign. And that breakout, to me, implies ongoing outperformance for the Findi sector.
And the resources against the all share index?
And now the resource against the all share index doesn't
still
look nearly
dreadful.
as good. I mean, here you can see the steady underperformance over the last 2 years or so. And most recently, we've broken underneath this uptrend over there, and we're now sort of retesting the prior relative lows on the resources index, the same as where we were in July last year. So on that basis alone, I think aligning yourself with the momentum in the domestic sectors of the market is a safer bet than trying to go and pick bottoms in the resources shares at the moment.
Okay, so in that context then, the share that you're looking at this evening is Bidvest.
Yeah. We've entered a trade in Bidvest over the last couple of days, and subscribers to traderscorner.co.za would have got the heads up on this last week. Now, if you have a look at the chart that's on the screen at the moment, what you can see is that Bidvest has been oscillating up and down within a nice channel between 280 Rand at the bottom and 300 Rand at the top. And that's a very tradable range. And what we've noticed over the last week or so is that the stock traded down to 280 Rand. It actually traded below that level and then back up. And when I see that happening, that's often to me a very, very good indication that you can actually go into that stock once it's traded back up into the range. And then you've got a very, very clear area of where to put your stop loss, because we know that that was probably a false break now, back to the bottom of the range. It's moved back up inside. That false break would have probably triggered a whole bunch of stop losses, and the likelihood now is that the weak hands have been flushed out of the stock, and we're now back up inside the trading range. So from here, we look for a potential move back to the top of the trading range, back up to 300 Rand. So on that basis, I've gone along and I've actually bought for our portfolio already. I've gone in at 280 Rand and 70 cents, and my stop loss is 274 Rand, which is basically outside the way of the lowest point that we saw during that false break of last week.
Okay, so in greater detail, if you can take us through the mechanics of that trade.
All right, so we were buying at 280 Rand and 70 cents, as I said. Stop loss is 274 Rand. The risk per share, therefore, is 6 Rand 70. I'm going to risk only 1% of our capital on this trade. Now, this is because of what I said about the overall market structure looking a little bit questionable now, going back to that initial chart of the top 40. So I'm only risking 1% of our capital, which is 3,400 Rand, given that our account is sitting at 340,000 Rand at the moment. To get our size of trade, we take the capital risk, 3,400 Rand, and we divide it by the risk per share of 6.70 Rand. That gives us 507 shares. So I've rounded it down to 500 CFDs for our portfolio. My target's 300 Rand, and that means that our risk to reward ratio is 1 to 2.88.
So is that enough to you? Yeah, enough for you?
Yeah, that's plenty good enough. Anything more than 2 to 1 for me is pretty much worth pursuing. And then our exposure on this trade, a lot of viewers have asked me to put this up, so I'm going to do this from now on. The total exposure to Bidvest here is 140,000 Rand. That's what we've actually taken the exposure to this share.
But it's not what you stand to lose. What you stand to lose is 3,400.
That's correct. Provided I'm good and I stick to my stop loss, if it gets hit, then we won't lose more than 3,400 Rand.
Garth, before we wrap up and look at the portfolio and also what you might do with the long position on the top 40, false breaks, do you find those quite useful as an indicator that it is a good point to buy? I mean, is that for you, okay, nothing is fail-safe in the market, but is that something that you would look out for always when you enter a high probability trade?
Yeah, not always, but often if I see a false break, like we've seen on that Bidvest, and then a stock moves back up above a support level, that to me is quite an encouraging sign, because what it means is that all the weak hands in that share have been flushed out. The stop losses have probably been flushed out, and the likelihood of further selling pressure below that level now is significantly reduced as the share price moves back up into the trading range. And I think it does give us a good risk to reward ratio and a fairly high degree of success, I think, on a false break like that.
Okay, so it's a long position in Bidvest this week. And what does the portfolio look like, given that there has been a bit of a push-me, pull-you effect with the two positions that you've had open on the portfolio?
Yes, that's it. So we're sitting with 341,000 Rand in our account now, which is up 36.6%. So that's up a bit from last week. Have a look here. Our option structure that we entered 2 weeks ago is now actually working for us. We've got a theoretical profit of 9,400 Rand on that trade. But remember, I did buy slightly against that structure last week, but I didn't go a full 100% long against our option structure. I just went in with one contract as opposed to our 2 put options that we've got on that. So we're losing 6,700 Rand on the top 40 future, but we're making 9,400 Rand on the options. So net, we're actually up if you take the two into consideration. And then we've got that Bidvest trade, which we've done this week, and there we are in the money with 1,370 Rand to the good on that trade.
And with that Aussie contracts, what might you end up doing with that? I mean, if there is more market weakness, would you look to exit that position? Because you don't want it to be a drain on the portfolio.
No, I don't. But also remember that the further the market falls, that options trade will make more for us. So we're still looking pretty on it at the moment. What I will do and what my strategy is going to be is if we get that oversold bounce that I spoke about, I'll probably look to sell that 1 December top 40 future. I'll get rid of that and then leave the option structure open naked for downside protection.
Okay. It's always nice to have these in the bag. And I suppose this proves it, just having this kind of protection and this hedge that you can play around, depending on what happens on the markets.
Correct.
And Garth, just to end off with next course that you'll be holding?
Yes, so I finished the heavy schedule of September, having a break for a few weeks, but I'm going to be running an Understanding CFDs course on the evening of the 23rd of October in Johannesburg. It's a 2-hour course. It's 490 Rand to attend it, and it's just really understanding how a CFD works, what are the mechanics of the product. Anybody that's interested in attending that course, please email me, garth@traderscorner.co.za, and I'll send you the information.
Okay, great. We'll leave it there. Garth, thanks as always for coming onto the program. That is Garth McKenzie, founder and editor of Traders Corner.
Traders Corner is proudly brought to you by IG, the specialists in CFD trading.